and welcome to the Cyclical Investors Club YouTube channel. Today I'm going to be revisiting Humana stock by popular request. I've covered this one before, but today I'm going to take a look at it after it had a big decline today. It's down another like 20%, I think, down to the $230 level, which is about 50% off its highs. So to boil everything down, like the big question now is, is this like a value trap, or when is the best time to buy the stock? Now, historically, or usually, I use historical earnings trends to try to kind of forecast out into the future because of this kind of unusual decline that we're having, which is probably going to last another couple of years, it looks like. It doesn't really make sense to kind of extrapolate what's happened in the past necessarily for in the future. But what it does do is show that the business is capable of growing that much, and it's capable of growing that much again. But the most important issue we have to deal with is we don't know where the earnings are going to bottom and start to grow again. So how do we try to figure this out? Well, the story today is that so these guys do like health insurance, like Medicare Advantage, and they get bonuses if for the number of members or clients or whatever who are in 4-star and 5-star rated plans. Some of their plans were lower than the 4-star rating, and so therefore they're not going to get paid bonuses by the government in order because though they don't have as many members in the higher rated plans. So chances are it looks like they won't earn as much money in the next couple of years because of that. And I think I read that they were suing to try to get that changed because they didn't agree with some of the data, but we'll see how that turns out. I've read some comments and anecdotal evidence that really it seemed like they were just trying to squeeze every last drop of earnings out of people that they could, making it difficult to file claims, or not file, but get them approved and everything like that. And so there were some doctors and stuff who just decided not to use them because they were too much of a pain to deal with. And so if you're a patient and your doctor doesn't take a certain insurance, then you'll switch your insurance to somebody else, right? So there's I read some things that was happening. And that kind of makes, logical sense to me. I mean, healthcare expenses can only grow so much, and these health insurance companies really squeeze every penny they can out of the GDP of the economy. So we might see a little reset here. Now, the question from an investor point of view is, I think, again, where is this going to bottom? Where are earnings going to bottom and start to grow again off that base? So when they start to do that, we know what they're capable of, growing. Let us see what the fast graph has. It has like 11%. That includes this drawdown. But before, growing like 20% a year for quite some time. So I think once it bottoms, getting these double-digit earnings growth rates is probably possible. But probably going to need some business changes in order to do that. Wall Street's, when a stock drops over 50%, activists start to get involved. Things start to get more serious for management and the board. And so I would expect that, the buzzards are circling a little bit here in that regard. The problem is we don't know when the earnings will bottom, and they could bottom much, much lower. So in situations like this, where the past isn't necessarily a good guide, like quantitatively for the future, but we do know that once the earnings bottom in a new place, that they can grow after that. What do we kind of do with that? Well, for me, and what I've been telling people in the Cyclical Investors Club during this decline, once we got to a certain point, I think it was last summer or this summer, was to use a kind of momentum factor as well. So we know we should have a decent business We know they're basically going through like a type of reset in terms of where earnings are going to reset to. And so it's not like well, it could become, but it's probably not like an Estee Lauder who's losing, or a Nike who's losing business to competitors fundamentally and methodically on this trajectory lower. So it's not like a turnaround or advanced auto parts. I mean, I made a video about why I don't invest in turnarounds, so I feel like I need to talk about that a little bit. This could be a mistake when a person ultimately decides to buy it, but because it doesn't get turned around, like that's definitely possible. But it seems to me like it's like a turnaroundable situation. Like I bought Adidas when it was down close to the lows, when they had the whole problem with what was it, Kane West? Is that right? I don't know. Everybody changes their names nowadays. But let's look at Adidas really quickly, or Adidas, as they say. So yeah, so we see not exactly, this is COVID here, and we saw that they were coming to bounce back, and then the whole problem with the Yeezy shoes or whatever hit, and the stock just got totally whacked. And I bought it like some point during the summer here, I think. So it's up like 80% or something since then. But what we see here is earnings bottomed here and started to grow off that bottom, 59%, 75%, but they're nowhere close to where they were pre-pandemic. But if you buy it cheap enough, you can do really well with it still, right? So this 75 PE is anticipating basically a return to normal here in the next couple years. So it's a similar type of situation, I think, with Humana, but it can be hard to know when to like come in and buy. Now, I bought Adidas on the way down. I would wait for Humana to bottom and start to come up until momentum is positive. So, and then because it should be cheap enough based on these peak earnings here. Now, I don't know if they'll get earnings back to the peak. You look at Adidas, they're not back there yet, but the idea is we know they're capable of it, right? So let's see if I can load my spreadsheet here. All right, so here's Humana. Here are kind of the calculations. So the recession buy price, which has lowered slightly, I think, since my last video, is down about 260. And right now, the current price is 230. So it's below that. So the valuation looks decent. Like it looks like it's fallen far enough that there's enough upside to make it the risk worth it, right? So if it recovers from here, it's 100% return. But the problem is we don't know if like this is going to be the bottom. We don't know if it's going to be the bottom for earnings or the stock price. So what I told members was to use momentum. Right now it has a D plus. This is from Seeking Alpha. If you have a membership over on Seeking Alpha, they have a momentum score from their quant service. And so I want this to be B minus or better. It's D plus now. It will be F within the next couple days. It usually trails the movement a couple days, so this isn't like real time. So this is going down to an F after the drop today. So it has like the worst momentum. So if you don't have a subscription there, I would probably use, I'm going to try to pull up FinViz here. It's free, FINVIZ.com. If I can get it to load, let me try to refresh it. What I think is you could use like a 200-day simple moving average. This is going to be available on every brokerage that you have out there. Or like a 50 moving average using weekly period, which when I was looking at it, I think that might be the way to go. So they're both around, okay, so we have the 200-day, which is this kind of copper color on here, and it's at about 360. So that will keep coming down over time. And then I think, and that's the daily. So I think if we go to weekly, the 50 looks about this at about the same place now, but it should adjust faster. And I think that might be like the way to go. Sorry, I got to put up with all these ads. This is what you get for the free, for getting things for free. All right, so I changed it to weekly. I'm not sure if this needs to. Maybe we can just do candle. I'm not a technical analyst, by the way, but sometimes this comes in handy. Okay, so it's not going to show that. Let me go back to the setting it was on. I just want to show you what you can look at here. So the 200-day is one, but I think it might be a little slow to adjust. The thing is, like, news will probably come out and it will bump to the upside at some point. But if we use the 50 simple moving average and put it on weekly, that's going to be this orange color, which is also about around 370-ish right now. But you can see the trajectory, how it follows the stock price down a little more smoothly and a little more quickly. That's probably about the pace you want to see. And then whenever the stock price bottoms, wherever that is, and it rises back above this level, it won't, I doubt it'll be all the way up at 375. It'll probably be maybe, who knows? That's the problem. We don't know. But when it puts in a clear bottom, when it rises above this level here, wherever it is when that happens, that's when I would consider coming in and buying it. There's no guarantee because we don't know what earnings are going to do, but it seems like a situation where if management can improve their service, they can probably turn things around. And the pressure is going to be different. Like the pressure when you're at when you're earning $26 a share to grow 10% next year, to try to get that extra money out of your customers, right? The pressure is much different there than when you're earning $16 or less a year to try to stop the hemorrhaging and not to earn $10 a year the next couple years. So that puts more of an incentive on improving your service, maybe earning less money in exchange for that. But relative to wherever the stock price and earnings are at that point, folks will be happy to accept whatever those earnings are as long as they can start growing again. So that's the idea behind it. And I'm not an expert at all in health and Medicare health insurance or whatever. But just from what I've read, that seems like the broad situation that we're in. It's kind of like Adidas. They have to get through whatever debacle they had with the Yeezy shoes. And sometimes that can help you go out and talk to your customers, talk to your, in their case, shoe company, shoe retailers. Really listen to them and put all your emphasis on that. And then you can start taking share from Nike if you're them. So that's the type of thing that Humana is going to have to do. And there's going to be, I think the main shift is the pressure is going to be on them to do that now, whereas the pressure in 2023 was to earn another 10 or 12% in 2024. But they kind of reached the limit of their capability in order to do that, and now they have to kind of dig out from wherever they land. So the stock price should, reflect that, I think, more quickly than almost anything else. Now, you're not going to pick the bottom when you're doing something, when you're taking that approach, but it can save you. Let's go back here. I mean, I went and looked. There's been 2 sell articles I've seen written on Humana and 30 buy articles or something. I'm just kind of throwing numbers out, but that's the ratio basically, 15 buys for every 1 sell during this period. So people were, should I buy? Or they're buying, and then something else bad happens, and the people who own this stock understand that right now. And it's where it can be useful to and I've been watching it the whole time. It's been kind of hovering around those buy levels. And I've just been really patient. So we haven't bought this one yet, and it saved us a bunch of money. So if you're interested in join in the Cyclical Investors Club. Maybe I can help save you money in stocks like Humana. Not that I never get into some too early, but I've been doing this long enough that usually I can I know when I have a sense on when it's a good idea to be patient, and this was one of them. So hopefully that helps everybody. I think at 230 the price is fine, but we don't know if this is the bottom. We don't know if this is the bottom for earnings. We don't know how long a recovery is going to take, and there are a lot of unknowns, and so it's best to just take one's time, let the market kind of help guide us to when it thinks the future looks pretty good. And then you can maybe get in on like a good reset, hopefully even lower sorry if you own it, but if it gets down to like 170 and then gets back up to 200, and then that's the new reset, well, you have 150% potential gain over the next 5, 6, 7 years or something like that. So that's kind of the setup that I would look for to buy the stock. All right, hopefully you found that useful. If you did, hit the subscribe button. I also have a 25% off affiliate link for Fastgraphs, which you saw me using here. And I have free tier over on Patreon, and I have a new weekly pick service over on Patreon at $25 a month for the weekly pick, and I track the results of all those. I just launched it yesterday. So good time to get in on that if you're interested. And I'll have those links in the bottom too, in the description. All right, later everybody.